The market was off the chain today. What exactly happened? What exactly can we look forward to? I am Dr. Stock, Doctor of Education, and I once got a concert ticket for 45 cents. The headliners were 50 Cent and Nickelback. Listen to these numbers. The Dow was up 0.85%. The Nasdaq was up 1.74%. The S&P up 1.45%. Green all throughout the markets. It was just incredibly fun over at the Discord. I know that we're going nuts. We're going to take a look at the charts and see what that means on a technical basis for us and where we can expect to go throughout the rest of the week. And also the economic reports that got us there and the impact that it had on the Fed. I'm going to also tell you in this video how you can get up to 16 free stocks using my link that's down in the description, and also how you can get access to my exclusive content that I have over at the Patreon. In the meantime, though, I'm just too excited to hold back the charts any longer. So here we're looking at QQQ, and you can see the channel that we're in, that we bounced off the bottom of that thing. We actually passed through the 50-day. There we go, get that in the center of the screen for you. So we passed right down through the 50-day at about 370, and we closed at almost 375. Where can we go from there? Well, we actually are sort of sitting a little bit at resistance right now. However, we have room to up to about 378 before we run into a little bit more. Not too much though. Honestly, up to 384, which is really where we had this previous peak over here and also these previous lows as well. I think that really starts to trap us a little bit. So if we're looking for hard resistance, I think that's really where we can find it for the Qs. And I did mention the intraday charts. So let me go in here and switch this over so we can actually see the full hours from the day. And 10 a.m. 10 a.m. is when our reports came out. Right here's 10 a.m. on the chart. And you can see that we anticipated good results, but man, did the stock market just rip right after that. So like I said, you can see that change. We were sitting at about 0.5%, and then we went quickly up from there. We peaked out 0.96%. So that put on almost immediately 0.5% back into the market when you look at that, as according to the Qs that I have here. And if we go to the SPY, it's going to be very much the same story, that we did blast through the 50-day on this one, related charts, and we actually have 452 as resistance. I think it's minor resistance for us, not too heavy. I think the bigger resistance is actually kind of around 457, 458 when we look at this one. And so we have 1 to 2% to put on to the S&P yet, according to what we have in the SPY right now. So excellent day. Wonderful results with the overall markets when we look at those. And of course, the stocks that determine the indices values, those also just gorgeous day, green all over the place to be found. So here we are looking at trading economics. I like the way the calendar is broken down in here for all of you. Redbook actually wasn't great for us. The fact that we were at 4.2% year over year, not great when we were at 0.29% previously, but we'll take that. It seemed not to rattle the markets too much. Now, when we come down to 10 a.m., there's our JOLTS job openings, putting us down below 9 million for the first time in a while. I forget exactly how long it's been since we had a JOLTS openings that low. And then when we look at quits were also pretty good for us. Consumer confidence, I said that we wanted that also to be a little bit softer to be good for the market. So everything that I said in the video yesterday regarding jobs from JOLTS and from consumer confidence, it came to pass, which is a good thing, because then that also meant the levity in the markets, the upward pressure in the markets, and we saw it printed big time for us. It even put us beyond the 50-day where I thought that we would go. I thought it would at least take us up to there, and they were so good that it actually took us beyond there. So that was wonderful there. So moving on from there to Wednesday, GDP is going to be the big one. Yesterday, I said the price index, which I actually meant for the growth rate, but yesterday I said 4.1 was what we had last for the first estimate. For the advanced estimate for GDP, it's actually 2% is what we had for the advanced estimate. The forecast is now for 2.4%, and that's one that if we come in under forecast, that's upward pressure for the markets. As long as it's not too far under that, we still are working on threading the needle, or the Goldilocks scenario for inflation and labor market softness, and also economic growth, so that we don't end up in any sort of recessionary times, because too much of this, too much softness with the reports that we get for jobs, too much softness in the economy. Now we start to look like we're going to start tipping back the other way towards recession, and then that's downward pressure instead on the markets. And I referred to that yesterday in my video as well. So what does this mean for the markets going forward? I'll get to that in just a moment. I want to tell you real quick that you can get up to 16 free stocks using my link down in the description. Just sign up with Moomoo, make your deposit of $100 or more, and get your free stocks. 5 free stocks for the $100 tier, 15 free stocks for the $1,000 and $5,000 tiers. That $5,000 tier is a free share Tesla or Google as well. And there's a $50 cash reward to trade with at every tier. So go ahead and get those free stocks from Moomoo. And also, if you want access to my Patreon exclusive content, you can find that link down in the description as well. And I am building to the products and services that I have over there all the time. So you can talk to me in the private Discord throughout the trading day. The options plays that I put out, the different trades that I make, my buys and sells are all over there. My NVIDIA stock price prediction, NVIDIA earnings forecast coming up for Q3 and also projected all the way out through 2028. That is also available over there right now. So go ahead and take advantage of that. I also have my options course building up over there and also my watch list of stocks. I put my Tesla stock price prediction over there. I just keep on adding to that value all the time. Come on over. We'd absolutely love to have you. So real quick trip back to the Qs and back to the SPY. Here we are. We'll zoom in. That 50-day we now have as support for us. So if GDP comes in at about expectations, maybe we soften a little bit from there. Maybe we even have a little bit of upward pressure, a little bit mixed, but I don't think that we move much off that number that we have right now if GDP doesn't come in great for us. PCE, quarter over quarter PCE, also gets reported for us, so we'll see what that has to say. That 50-day, I think, is decent support as long as we don't get numbers that send us back to more likelihood of rate hikes for the Fed, because it's the idea that the Fed has less reason to hike rates from the economic reports that we got is the reason why the markets rallied so hard like they did today. That'd be like, hey, no more rate hikes. We are done tightening. The next thing that we do is we cut from here. Yay! So that's what we're seeing. So that 50-day is about 1% down for us. And then on top of that, we could possibly put in about 1%. And then from that, going all the way up to about 385, 387, that would be about 3 to 4%. That'd be a very rosy case scenario. At that point in time, I start to worry more about a double top occurring over here, and then just wondering what that next thing looks like. So the market can't go up forever. We saw that before. It took that correction. Now it's possible that we start maybe a little bit slower of an ascent from there, but September historically is not great for the stock market. So we'll watch and see what that looks like. Now over to the the SPY. On the SPY, we could possibly put in another 2.5% over the next several days. And I do want to take a moment here to tell you that on Friday, I think that we could actually have a lot of volatility between now and then, especially with closing up some of the weekly options. And then that also is the first day of September that we have. It's the last trading day before a 3-day weekend. So people will not want to hold their options if they're the buyers of those options or the holders of those options over that weekend. It's just too much time value being eaten away. So wherever we end up the week, I don't know that it's near where we're at right now. I don't know if it's up or down from right now. I do know that the 50-day is acting as support, which is a little over 1% away in the SPY when we look at that one. And that we could also have another 2.5% that we could possibly put on top of what we've already seen. And we're just going to have to replan as the market moves and as we see more coming forward for us. And there still is, we're starting to see things slide back the other way and it puts exuberance into the market. But at what point in time does that exuberance start to change if the numbers keep sliding and they don't stop sliding and we start leaning too much into recession? We need to be wary of that. We need to be watching for it. I will watch for it and I will put it up on this channel. Again, if you like my commentary, you want to hear more of it, you want to see what I'm buying and selling, and if you also want access to my options courses that I'm putting up on the Patreon, the NVIDIA stock price prediction that's also up there, the NVIDIA earnings forecast that are there for you, CPI information, Tesla, watch list of stocks, private Discord, you name it. I'm just going to keep on adding to that over time until it's enough value to keep on inspiring people to come on over and adding to the value for the people that are already there in the community. They're wonderful people. I'm glad that they're there. I'm very thankful for them, and we would welcome you with open arms. If you are of a similar sort, don't forget about your stocks from Moomoo either. Sign up. That offer does expire at the end of August here, so don't waste your time on that one. You don't have a lot of time left before that offer does expire. Thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.